Hello traders, this is Blake Morrow with ForexAnalytix, and I want to welcome you to this week's week ahead video for October 1st, 2017, and we have a special video for you today. We have Grega Horvat, our Elliott wave contributor. He's going to be providing you analysis today, but before I get into that, I want to tell you that this is the last weekend of our special new seasonal offer. The offer really entails that you can get involved with our private chat room. That's if you buy a semi-annual or annual subscription. You have the option of buying 1 month and getting 1 month free. It doesn't get you in the chat room, but if you buy the semi-annual, which is 6 months for the price of 4, or the annual, which is 12 months for the price of 8, you can be involved in our chat room. So make sure you take advantage of this offer this weekend because it does expire on Monday. With that being said, I want to introduce Grega Horvat, but after this video, make sure you click the like button on the YouTube player just to tell us that you really enjoyed the video and hopefully it helps you out. And then also make sure you subscribe to this channel. You guys have a great trading weekend. Here's Grega Horvat.
Good day traders, my name is Grega Horvat and welcome to a new video analysis in which I will talk about price action that could unfold in the coming week. Since Blake is out, I will of course cover him. So most of my analysis will obviously be viewed from an Elliott wave perspective. If you are following our work, if you're our member, then you know that we also cover a lot of markets from an Elliott wave point of view. It's advanced technical analysis which helps me a lot when predicting a price action. I think that main advantage for an Elliott wave analysis is actually because it's based on crowd psychology. And second, when it comes to trading, you exactly know where are your invalidation levels. So I found it very useful, and especially if you will combine it with some other market tools such as candlesticks or just basic technical analysis, which we also cover on our website, then I really think it may give you a real confidence when it comes to analysis and trading. So what we will firstly look at is actually dollar index. Okay, so dollar index is at some very interesting zone at the moment. So here on the monthly chart, as you can see, I'm still observing potentially ongoing 5-wave rise here, 5-wave rise within wave C, red wave C, that started back in 2011. So actually I see this recent development since 2015 as a corrective movement. So it's a free wave pattern, a flat correction in ABC waves, which may suggest that we will see another push up here for a wave 5. Now this is also very interesting because here I came out with this corrective cycle analysis since market bottomed in 2008, and notice that here actually market made a corrective movement, okay, in 27 months or so, and then as you can see it turned higher, and again in 2012 we have seen a corrective cycle for 24 weeks or so, months, and then turn to the upside. And now again we have a very similar shape here, which may be a corrective cycle now nearing a completion. Also keep in mind that we are at some very interesting support levels here, and here this old swing high. So actually time and price may suggest that by the end of the year we may again see a new dollar bullish cycle. So I think this is very, very interesting because obviously we may then be looking for potential trade setups in these directions. So I would not be surprised to see more upside on dollar index as we run into the year end, and the wave count also may suggest, as I said, ABC down in wave 4, that we are going higher sooner or later. However, it's very important to wait on a confirming price action when it comes to trading, and at this stage I still do not have enough of data to confirm that we are already in a new bullish phase, because this recent rally, as you can see here from September lows, is still somehow in three waves. Okay, so actually it can be an ABC movement as a wave 4, and maybe a final push down could occur early next month before market starts a new strong uptrend. Okay, and I would really not be surprised to see dollar index much higher by December. Okay, so for now still I'm somehow on the sidelines, and I'm waiting for some confirmation, either if we are already turning bullish on dollar index or if that's only a corrective phase. What would I have to see to confirm any significant change in trend is a decisive break above 94.20. So if we can pass this level and made a decisive break higher with a daily close above this level, of course, daily close price is to me the most important price of the day, only then I would say that we are headed higher, and I would look for potential dollar long opportunities, particularly against the euro, Japanese yen, and pound. So for now we are still not there yet, so I think it's safer to stick with dollar weakness, because obviously we still have overall bearish trend, we have lower lows, lower swing highs, so this is characteristics of a downtrend. So I'm still viewing this, as I said, as a wave 4 that can be part of this wave C, which may reach new lows. So with that being said, on euro dollar, weekly chart here also, as I said, flat correction here, waiting on top formation, but still we are not there yet, I guess. This can be a wave 4. Also notice that we moved back to the area of a former wave 4 of 2 lesser degrees, actually, after a divergence was formed here at the top. So this pullback can be seen as a corrective movement. If we are staying above this swing low, which was established at 1.1660, around there, then obviously this market is still in uptrend. When it comes to trading, you definitely want to see a bullish confirmation, and what is this is actually that you want to see an impulsive bounce from the lows. So if we think that this is an ABC decline in progress, then we need 5 waves up. So I would wait on a 5-wave rally back towards this trend line. Okay, if we can touch this trend line, or maybe even breaking above it, then obviously wait on a 3-wave retracement and then look for longs. But for now, I think it's a little bit still too early to say that wave 4 has bottomed here. Definitely you want to see more price data from that. Also, for dollar weakness, I really like cable, because it made a very nice pullback here from September highs. And notice that pullback is actually very slow, very choppy, and overlapping. Okay, so what I see here is a potential wave 4 that also retraced 38.2% compared to this wave 3. And what is really interesting is that we have here this swing high, old swing high, that could turn into support as well. Now, a lot of people, when trading fourth waves, are looking for a pullback back to the area of a former wave 4. Okay, in our case this was here, but this normally is fine when you have normal characteristics within previous 5-wave cycle. But notice that in this cycle from here to here, 5th wave was somehow extended, and when 5th wave is extended, you may see a retracement of a wave 4 of a higher degree only to a starting point of a wave 4 of lower degree, which was actually here. Okay, so I would not be surprised to see a bounce from that level, and would definitely not be looking for any significant drop towards this level, because if we go much lower, then I think this is not going to be wave 4 anymore. Okay, so for now we are at very interesting levels, and I will be looking and expecting a rise next week. A decisive break above this trendline resistance would likely send prices higher into wave 5, and that's when and where I would look for potential long opportunities. So that's the case for euro dollar and cable. I'm tracking those two for bullish confirmation to resume current uptrend, with in mind that dollar index can still be in downtrend. Okay, but there are some pairs which are already having a very nice, good looking structure when it comes to dollar bullish field. Okay, so if we'll see more upside on dollar index above a breakout above that 94.20, as I said, then I think that this can be very interesting to look at some commodity currency pairs. So Aussie dollar, for example, this one is quite interesting. Here on a weekly chart we have seen bounce in 3 waves, and notice that we have some nice bearish reversal from recent highs. I was looking here for a push to a new high over the last few weeks. We got a 5th wave. We came very close back to the area of a former wave 4 here, as you can see, and now we are turning down. So I would not be surprised to see more weakness. We, however, are here at potential support, but if this support is going to be broken, okay, let's say that we see a drop towards 0.770, then I would watch out for a pullback and then expect more weakness. So we are at some key support levels, which definitely has to be broken decisively to confirm bearish continuation, okay? Because as I said, we have here old swing high and current support of wave 4, okay? So we want to see these supports broken before we may say that real bearish trend has resumed. But so far, I think it's a very good looking wave structure, particularly on a weekly chart. It was a very deep and healthy correction. Now let's take a look also in line with this New Zealand dollar. This one is also looking bearish. Here was a recovery from 2015, a very overlapping, okay? You definitely cannot count this in any clear impulsive fashion, so I assume that there will be more weakness coming in. But when I analyze the markets, I always try to analyze one wave at a time, and in such case it means you either will focus on a 5-wave movement or only on a 3-wave movement. So in my case, obviously that will be a 3-wave movement. I would expect a 3-wave decline back towards this lower trendline support of this bullish channel. So even if this reversal is going to be only a corrective move, okay, we still have room for more downside. And if we make just a quick outlook here of potential 3rd wave drop, as you can see the projection, because wave C is in a lot of cases very similar to distance compared to wave A, we came out with the projection around this trendline support at 0.70. So actually this comes in perfectly with an ABC projection down towards this channel support. Okay, so definitely I'm looking towards these levels to be touched maybe already next month. On the 4-hour chart, as you can see, reason why we are bearish is because previously we had 5 waves to the downside, and then the rally was clearly in a corrective manner back towards 61.8% retracement, and looks like that we are now already making a new impulsive cycles to the downside. Okay, so clearly stay bearish on New Zealand dollar. So if dollar index will break to the upside and overall dollar strength will show up, then New Zealand dollar, Aussie dollar can be good for shorts. Okay, also why Aussie dollar came under pressure is probably because of metals. Now gold made a very nice bearish turning point last week, or actually on the last few weeks this month. So here on the 4-hour, what we see is actually a 5-wave drop from this September high. Okay, so actually through whole month we have seen a very strong decline on metals. So obviously this makes a very strong bearish reversal candlestick formation. and it suggests that in upcoming months we may experience more weakness on metals. And that's also another reason why Aussie could stay under pressure as well. So definitely I will keep a close eye on Aussie also. However, nothing moves in straight line. You definitely want to see a corrective movements before joining the trend to make better entries. So I would watch out for this wave B correction. As you know, you would expect, if we assume that market will bottom here for wave A in the near future, you could expect a rise back towards 1313 level. It was the area of former fourth waves here and here, as you can see, and also former swing lows here. So that's a pretty strong, pretty nice, interesting region where a new leg down could occur if we get, of course, bouncing three waves. Also on a daily chart, this 5-wave decline fits in wave A, that is part actually of this wave D, which is part of a very complex correction, a triangle. Okay, so I'm looking here for a triangle to be placed in a wave B, because we haven't seen a push above wave A. Firstly, I was looking for more upside. I thought that wave C will rally back towards 1400. Obviously this did not happen. We are staying sideways here, so it looks like that this is going to be a triangle, because this rise is probably the most important for that case. This rise was made by three waves, so I think it perfectly fits into wave C. So expect another three wave drop, and for now we could stay bearish set on metals, especially after this wave B will show up. So this could, as I said, help Aussie to come much lower. Also, as you know, gold has a strong correlation with 10-year US notes. So what we will take a look at is here on monthly chart. As you can see, I'm actually observing a corrective decline. It can be wave 4 as part of diagonal triangle here that will send prices higher still within wave C in upcoming months, maybe I should say in 2018. So for now we are staring bearish here, because we need 5 waves to the downside. So if we do not want to predict price action too far into the future, then definitely we need to focus on lower time frames. So daily chart is pretty interesting here. It was a very slow and overlapping recovery, and what is really important for me is that we have seen a decisive break to the downside beneath this trend line support. Okay, so it looks like that new fifth wave lower can be in play here. Watch out for any rallies in three waves back towards this trend line before market turns to the downside. Okay, so this market signals actually that gold could stay under pressure, and so Aussie as well. Actually, I will make a comparison to gold. So we will hide all waves and we will compare it to gold. And as you can see here, actually market turned down at the same time. Okay, so this in orange, this is gold, this is in black is 10-year US notes, and you can see that both markets moved nicely together to the downside, and also they formed similar reversals in the past as well. Okay, as you can see here. So definitely, because we have 5 waves to the downside on gold, that's why I'm quite confident that 10-year US notes are actually also turning bearish. And I guess that this, just a second, and I guess that this wave count of 10-year US notes, which is clearly bearish, is just confirm how this bearish case. Okay, so that's for 10-year US notes and gold, and I will also cover the S&P 500. The S&P 500 is rising quite strongly. It closed surprisingly much higher on Friday, and it looks like that there is room for this current fifth wave to make an extension up towards this triangle measurement target. Okay, but what is really important is that we are making 5-wave rise out of this previous triangle. So this is going likely to be a final leg within bigger 5-wave cycle, ideally of a wave 3. So watch out for reversal signs next week, because this could send us into much deeper correction. I think that there can be time coming for a corrective setback. Why? Because here we can see, as I said, 5-wave rally within this black wave 3. Also notice that price is now approaching towards this trend line, parallel trend line of an Elliott wave channel. So actually it's a nice potential resistance here at near-term levels around 25.40, and this comes perfectly in line with this triangle measurement projection, which also we have it at 25.36. Okay, so watch out for more upside early next week, but then watch out for a reversal as well. Also on a monthly chart, if we cover this one very quickly, this is still a healthy, very strong uptrend that should resume after we see this wave 4 pullback. Okay, and ideally that will be the case in the coming months. Okay, traders, thank you very much for your attention. Now, if you like our services, if you like those charts, if you want regular updates on those markets and much more, we also cover Bitcoin and Ethereum. If you're interested in this one, we have special offer that will expire on Monday, I guess. So make sure to check this offer and grab your opportunity now, because we don't know when it will be available again. Okay, so thank you very much. Have a good day and many pips in upcoming week. Bye.